Are you one of the accounting firm owners who is wondering about your fees and you've switched from hourly rates over to fixed fees, but they're actually costing you money? I'm Lauren Fogelman with Business Success Solution, and it might feel that that transition from an hourly rate over to fixed fees is something that helps you escape the hourly billing trap. But I want to let you know those fixed fees are still holding your firm back from exponential growth and profitability. It's what I call the pricing trap. And what happens is that pricing your services is an evolution. You usually start out with an hourly rate, and then some firm owners transition over to fixed fees. Well, those fixed fees just mean that you're still basing everything on how much time and operational costs it's going to take, and you think that it's value pricing. But the thing is that fixed fees are still based on time, so they're actually hourly billing in disguise. They're incognito. And think about it. How do you set your fixed fees? You look at the scope of a project, you calculate how much time you think it's going to cost, then you multiply it by your hourly rate and come up with a flat fee. And that is usually how much time, how people go ahead and set their fixed fees. And maybe you added in a little bit of buffer just in case you had those unexpected challenges, or there might be some additional scope that you didn't see in the original fixed assessment that you did. But the problem is you're still tying your fees to time. And the other part is as you become more efficient, whether it's gained expertise, insights, better processes, or you have better tools, software, and AI that you're now using, that means that as you gain efficiency, you ought to be charging less, not more, because it's just taking more time, and that's what you're basing your fees on. So I want to share a little bit about Brian McElroy, because when he first started his firm, he was charging those fixed fees, and he was thinking in terms of those hourly rates, how much something cost, how much it would take as far as the time, what his hourly rate was, and that's how he came up with his fixed fees. And as he said in a recent conversation, I was doing it all in my head based on what he thought his valid hourly rate was. And he was basing everything and trapped in that pricing trap of thinking about his time. And he thought that he moved away from hourly billing, but because he was still calculating time, even if it was in his head, he was still in that pricing trap. And now let's compare those fixed fees over to value pricing and why so many firms are starting to get on board with value pricing, especially as they're adding AI and efficiency improves, things are automated that used to be manual. So value pricing has absolutely nothing to do with time and effort. I'm going to say that again. Value pricing has nothing to do with time and effort. That's not what it's based on. That's the traditional pricing strategy. Value pricing is different. Instead, it's about the results, the outcomes, and that your clients care about, and then tying your fees to that. So think about it. If you are able to help your clients save maybe $50,000 a year in taxes, but it only took you 2 hours to go ahead and come up with that strategy, do you think that you ought to be charging any less than if it took you 20 hours? Your clients do not care how long it took you to save them $50,000. They care about the fact that you had the tools and the expertise to show them that they could save $50,000. That is what they are paying for, is that outcome, not the time or what was done to achieve it. So in order to start this transformation away from the fixed fee or time-based fees and hourly rate over to value pricing, then what you want to do is start to think about changing how you talk with potential clients or even current clients. Start to focus on the outcomes in those conversations, not about the tasks or the time involved. So think about it. You want to start to ask questions about what it is your clients want to achieve, and maybe think about how you can help them solve it. what results would matter most to them. Those are some of the insights you want to start to get to really figure out what your clients care most about. And then the next thing you want to do is come up with packages that are benefit-driven or results-based, outcome-based, not based on time, but based on achieving a specific outcome. So that means that now, instead of having that long line item invoice, you're going to now offer packages. And the packages, I usually recommend 3, are different levels of service that address specific client needs. The very basic one would be the silver package, and that's just giving clients what they need to be compliant with their taxes, filing on time, avoiding those penalties. The next one up, tier 2, would be the gold package. This is for clients that want business growth insights. They want growth strategies. They want to save time. They want to increase profitability. And then the third package is what I call the diamond package. It is where someone wants a comprehensive wraparound financial strategy because they're seeking long-term growth and wealth building, and maybe they're ready for outsourced CFO level services. So once again, you have 3 tiers: the silver, the gold, and the diamond. And by doing it this way and presenting packages to clients, you're now focusing on client outcomes, what they care about, not about the work, the tasks, or the time, the inputs to achieve that result. So when Brian shifted from being just a bookkeeper to being that advisor for his clients, as he said, the bookkeeping side is just a commodity. Clients are really paying for my expertise and my knowledge and what I have seen in the business world. That is Brian's words exactly. And as a result of this, it was a shift in his mindset. And it led to his revenue increasing by 54%, while reducing his client base from 40 to 13 clients. Because he increased his revenue by 54%, he reduced his client base by more than 50%. It means he's now working less, delivering more. He's working less, and he's delivering more value to his clients. So once again, he is working less, but he is delivering more value to his clients because he now has the capacity to focus on the advisory side, which is what he really enjoys doing. So here's something for you to think about to get started. Identify one service where you deliver significantly high value to your clients. It could be tax savings, financial clarity, or maybe improved cash flow. And instead of basing the price on time, consider the emotional or the monetary impact it has on your clients. So the monetary might be cost savings, business growth. The emotional impact will be reduced stress and also peace of mind that this has been taken care of by someone that they trust that will follow through. So it has a monetary value. It might have a time value for your clients because they save time, not having to figure it out themselves. You just give them the solution, you help them implement. And also the confidence that they have in you to help them to achieve that result that's important to them. And use those things as your baseline for creating that value-priced service. I would say, if this is new to you, test it out with a few select clients and just see how they respond, because people, including your clients, will pay for outcome when you're actually able to clearly communicate the value that they will be receiving. Once again, your clients will pay for outcomes when you're able to clearly communicate the value they are receiving. And as Brian said in his words, it was easiest when I can explain to a client that there is more value I can bring to the table than what I'm currently providing you with client service. So when he was able to explain to them that he was able to bring even more value than what he was doing, they often responded with "Oh, I didn't know you did that." And as a result of that, he was able to go ahead and expand the scope of his advisory services with his clients to where now they all receive some degree of advisory services. It's no longer just bookkeeping. So if that interests you, follow Brian's lead. It is very, very doable. And you might be thinking, well, I don't have clients like Brian. My clients, they might go ahead and push back. But I want you to know that when you focus on the outcomes instead of the time, you're going to start to appeal to clients who want your expertise to be able to help them solve a challenge and get this out of the way so they can move forward, and they are investing in the results that you deliver. And I just want to say, those clients are usually the dream clients. They do not haggle over price. They are not price sensitive because they see your services as an investment, not a cost. And you might worry about clients having some reactions about the price changes. Understandable. Most of us have that concern, and it's why we avoid doing it for months, if not years. And with some clients, like those oldest ones, you just don't ever touch them and change anything. So what Brian discovered is that 90% of the time, it was when he was explaining his advisory services or what else he could do for them, they said, I didn't know you could do that. Absolutely. Let's go ahead and move forward with that. And as I mentioned before, the key for Brian was focusing on the value of the additional services he could provide and what that meant to them and aligning it with their priorities. It wasn't just about raising the rates for the same work. So once again, what he was able to do that allowed him to move in this direction was focusing on the value of the additional services that he could provide and how it was aligned with something that was important to them. It wasn't just about raising the rates for the same work. I'm going to say, if there's something that appeals to you, then start off small. Once again, think about some of your best clients and start with them, the ones that already value what you have to offer. And you do not have to change the entire pricing model overnight. I know you're not going to do that anyway. It's not expected. This is a transformation that happens over time. So begin with one service or with one client. Let's start to get those yeses rolling in, start to get more confidence as you get people agreeing to it, and then move forward from there. Build upon it from there, but start small with those easy steps. And I just want to say the results, they will speak for themselves. Brian said right now, he's so well compensated for what he does. He enjoys what he does, and he doesn't have to spend a lot of time doing it. This frees up time for him to do other things outside of work that are very, very meaningful for him. And that is the power of value pricing. It transforms both your business and your quality of life. It is about recognizing the worth and being able to deliver on it, to follow through. So if you're ready to break free from that pricing trap, then let's have a conversation about how this would work for you and your firm. If that appeals to you, you want to be able to finally get this done, implement it, you're tired of leaving money on the table, underpricing your services, then let's talk about how to get this done in order to charge fees that reflect the value that you deliver to your clients. Go to businesssuccesssolution.com/let's talk, and that is the way to get started. Once again, businesssuccesssolution.com/let's talk to get started. Until next time, Warren Fogelman with businesssuccesssolution.com, showing accounting firm owners how to double their revenue working half the time.